Hey everyone, welcome back to the channel. My name is George. This is Franco. We are trading futures live, where we trade futures live in front of the camera every day. Thank you for joining us. A few things to take care of. Trading is inherently risky and can result in the loss of capital, so please do not take our trades. We're here for educational purposes. Please trade at your own risk. And with that, we had a fun day yesterday with the Fed rate hike yesterday, and I will turn it over to Franco.
Hey, what's going on, guys? Good morning. Welcome to the channel. Today we have a particular session because after Fed Day, it's very interesting to see what is going on today. The Bank of England raised rates, and the vote was overwhelmingly in favor of the rate hike, and the pound is crashing because of that. Same as happened with the dollar yesterday. After the news, we had a crash on the dollar. There is 9 minutes to the open, so we have a couple of things to check on before the market open. For the news today, I have the initial jobless claims. And for those who don't know what the initial jobless claims is when one claim an unemployment benefit to the government. It gets reported in this indicator. So for this week, we have 200,000 jobless claims made during the week. During last week, this is a number for the last week, and the forecast was a little bit lower, like 182,000. It's not a bad number. This is a good number. This is not a recessional number. Like during the pandemic, we had in the millions, and then we had like 600, 500, 400,000. Those are recessional, or numbers that fit more into a recession, right? This is a very, very low number. It's within our average, historical average. Then we have the jobless claim for week average, is a number just to have in mind, right? And then we don't have any other very important reports, but the Bank of England governor is going to speak. It won't affect us too much. Oh, it already happened though. And then we have a natural gas storage. If we trade crude oil or nat gas, then we can take care of this. But all right, there's one thing that I wanted to show you guys, that for instance, the NQ has been in a range since basically January, right? We're in the lower part of the range, but the market's been dropping, but it really hasn't gone anywhere. It hasn't picked a trend right now. So I wanted to show you this. This is a daily chart, just to, you know, bear in mind what the big picture is. These small blue lines, I don't know if you can appreciate, are the overnight high and low for today. Like I've said every day, this is a very sensitive level, the overnight high, overnight low for the same day, right? And these yellow lines are POC along the, you know, the daily chart. The dotted orange, the dashed orange lines are the extension for the ATR, meaning from the high to the low is the average ATR for the last 10 days, and from the low to the high is the average 10-day period ATR. So if this thing today moved within the average, we should have a day within these two lines. If it moves outside the lines, is beyond the average, right? All right. So one of the things that I do like to do every day is check up the currencies, right? Because I've told before how money flows within risky assets or safe havens, right? So for me, it's so important to see the picture for the day. And what I do is this. I fill up this little OneNote, right? And I've been doing this for quite a while already, right? Where I consider, can you check the image if it's if you can appreciate the OneNote? All right. So what I do is I check up the dollar, the yen, and the euro, one of the most important currencies around the world, right? And see how they are doing for the day. Like if the dollar is going up, that means money is flowing into the dollar, and the dollar is by definition considered a safe haven, right? Then the yen is the second safe haven that I consider, right? So the dollar and the yen both are going up today. How do I check that? Well, I do have different ways to see that. Like I created this yen indicator, like the dollar index. I created myself the yen index, right? I programmed that in TradingView. I can show you guys how to do it. It's pretty quick and easy. So right now the yen is kind of like retracing from London session, but it's been going up today, and the dollar is also going up. So those two safe havens are showing me a risk of sentiment for today, right? Also, I like to see what the bonds are doing, right? The bonds today are dropping, right? So if the bonds were going up, then I will have a perfect risk off day. But the bonds are not going up today. The bonds are going down, right? And here's a caveat: when we have inflation environment, bonds tends to lose steam. People wants to get out of bonds because what is a bond? Bond is a promise of future cash, right? But the promise of future cash is that we don't know. We know what the bond pays, right? But we don't know what the inflation rate is going to be, right? So the unpredictability on the inflation makes the bond not a very good asset against inflation, right? And another thing that I can notice here, and I can show you guys also, is that here, we're 1 minute before the open, right? I can show you guys how the equity markets are retracing, right? But what happens here? What happens when the market retraces and the bonds go down? Tech, NQ here is more sensitive to the drop, right? For some reason, tech of technology stocks or the NQ are more sensitive to rate hikes. When the rates are going up, then technology is more sensitive to the downside. If the bonds were going up, then technology behave a lot better, right? Well, I'm gonna pause here my pre-market. More, I will explain more of what I do um, in this channel regarding that, uh, way to predict or way to assess, if you will, the day, right? Here's another thing that does not make me very bullish as of right now is that the demand that I have is very, very far. I don't have a high quality zone that I could say, all right, here's where it can bounce. I don't. Um, I do not have any, right? All that I have is a euphoria that was created yesterday after the Fed. I might have this one, but I don't trust it very much. It's 13135, and the reason I don't trust it is that it was created between 2:30 and 3, right? I typically like zones before 11 a.m. Now, we had a lot of volume yesterday with the Fed news, um, but typically my demand zones are between 9:30 and 10:30. Uh, what's the reason for me to consider those areas like best areas to buy? Higher volume, meaning institutions, right? And usually the high of the low of the day is created within the first hour. Ah, 30-minute give or take, right? Let's say before 11 a.m., right? Um, so like 80% of the days, the high or the low of the day is created before 11 a.m., right? That's 80% of the days. So I stick to the higher probable event. That's why I tend to look up the by that time what happened that time. And look, this is trading is I would say is part science, part art, but I lean more to the art part. It's not something that you can have just one concept and just grasp that concept and make money out of that concept. For me, it's more like it's like story, right? Interpretation, what is going on, what is happening, what is the sentiment today. And I do have a way of, I mean, my type of trading is very particular. That doesn't fit, this, my way of trading does not fit in the majority of the people, right? I tend to be patient. I don't want to, overthink the situation. I just want to wait for the setup to show up, right? The majority of people want to trade right now. Like, okay, what do I do right now? Where is going to go this thing, up or down? Nobody knows. So if I were to trade short here, this can continue going down and I'll make money. Or if it reverses, I will lose money. So what I like to do in my trading is just see the setup. I watch the setup, right? I identify it, and then I wait for the price to come back to my zone, right? I rarely watch trend. I like the trend for the day, but I don't see the overall trend. So if the market has been going up, I could short it, and if it has gone down, I could go long. So I don't have any objection with that. Um, And I wanted to say that because I wanted to say that my way of trading is very particular and that does not fit to the majority of traders out there. I wanted to say that because I've read several books about traders and trading, right? And I've noticed some traders make money picking ups and bottoms, or other traders say don't dare to pick tops or bottoms, you will die trying to. Um, I read books about guys that just were trend followers, right? And I read other ones that were against the trend, were contrarians, right? And they all made money. But they all had this in common. And the commonality that I found was that they all risk less of what they made or their potential, right, per trade. So that concept, went very, very deep in my, mindset, in this sense. All right, if I'm gonna trade, I could trade in any way. Like, if I want to trade breakouts, then you'd be my guest. If you want to trade supply demand, or EMAs or trends, you can do whatever you want. What you cannot do is risk more of what you can make, or risk more of what you make, right? So the concept of risk and reward ratio is one thing that will make you money. Every trade is a roll in the dice. There's a probability. There's zero certainty in every trade. If I put a trade, it might work, it might not, right? So the probability is pure luck per single trade. Now, by the law of large numbers, because I tested my system, I know that I make 42%. 42% of my trades make me money, right? And 58% of my trading does lose money, right? So that's an idea that I wanted to throw there, so you guys have this very clear. It doesn't matter how you trade. What it does matter is how much you risk and how much you make. So right now we're approaching to the top of the candle of 2:30 yesterday, when the conference call started, right? And obviously here we will have some reaction. That is in 13,231 one quarter. 13,231 one quarter. It's a 30-minute humongous zone, right? Which I won't be taking. Just want to see if I can find something high quality there. And I do not have anything that is high quality that, gets my attention here. Is any particular reason why the market is dropping, George? Do we have any sort of news or something that we can say, all right, One thing that I do like to see on my pre-market analysis, I have a watch list of around 120, let's call it 130 stocks, right? Big companies. A lot of our most of them are in the Dow. I mean, all of the Dow stocks are in this watch list, and I do have a lot of technology and a lot of companies that I follow every day. So one way of taking the temperature of the market for me is, all right, what is this watch list doing? Okay, like 70%, 80% are dropping, 80% are up, right? And in that measure, I like to see how many are volatiles. Meaning, all right, I have a universe of 130 stocks, right? What are my top 10% doing and my bottom 10% doing? Are they dropping like big numbers, like 3-4%, or the top 10%, are they going up 3-4%, right? So I eyeball the volatility. It's not something that I have quantified. I'm trying to make a system to see how I can make an index off of this, but I've been doing it for years now. I see that sometimes the market is 0.5% up, right? But my watch list is 90% up, but all of the stocks are like 0.1%. And that means it shows as a green, right? But is 0.1% something, noticeable or considerable, like very important for me to say, all right, this stock is definitely gonna go up today. And then when the market opens and all the orders come in, what happens is that 0.1% gets erased, right? Gets deleted. Why? Because stocks has very little volume and went up just a tiny bit, right? So today, the case for today was, yes, the market was dropping like around 0.8%, but I saw stocks dropping 3-4%. And then I go and I do this, right? I go and I do this. I come here and I put, all right, my watch list is 85% red, right? It's not only 85% red, but it's 85% red and volatile. What is that? I'm seeing that I'm watching the stocks going down, high volume and high numbers. I mean, the movement is something to consider, right? It's not something to ignore. That makes me more bearish also in the morning, right? Like I said, yesterday we had a pretty big day. The market, has been very tough these days. Like every rally is being sold. So what I want to see is like a zone being created along after the open. Now today we have no news. We have no more news reports. So I do have this, right? I do have this. And there's, alright, so the 7-minute is going to close and the 3-minute is going to close at the same time. So I want to see what the internals are doing. So I see the ADD, right, behaving, favoring the short side, and I have the tick also favoring the short side big time. if I want to assess the risk for this trade, if I take this trade 77 to 93, how much is that?
Order submitted.
It's $310. So my risk today is $324. I do assess the risk per day. In the morning, I just input my account balance, and I want to trade no more than what the spreadsheet gives me. Meaning, per trade for this account, I need to trade no more than $324. For this trade, the risk per lot is $310. So it's within my parameters. So I can take this. If this risk were to be $500, what I would do is, all right, I want to get in within the zone, but I need to have my stop beyond the invalidation point. What is the invalidation point? Is a point where I say, all right, the zone did not work, right? The zone did not work. So, because what happens if I take the trade where it is right now and then I risk $300? Price can get in here, right? Price can get in here and stop me out, and then the zone will be still, you know, worth to take, right, or valid, and the price can continue in my favor. So what I like to do is I adjust the entry, right, to risk whatever amount that I'm allowed to risk in this account, right, but the stop is beyond the invalidation point. Meaning, if the zone is gonna work, the stop is not gonna get triggered. That's the most important thing. And I need to be aware that type of trading will make me miss some trades. I will miss some trades because I have limited risk. If I will have unlimited risk, that's another story. But for the account size and what we want to do with this account, the challenge that we just have, we need to consider the amount that we're risking per trade. Any comments on the news or something?
No.
Just dropping.
The big news today is the pound interest rates, like you mentioned before.
Yeah. I want to show you guys what the pound is doing. Just as a look, I have that trade. That trade is on, and I might have another one here. All right, I wanted to show you guys this. So let me transition here to this screen, right? And here is what I do with the dollar, right? You can see how the pound against the dollar is dropping here. 1.9%. I don't know if you guys can appreciate this, right? That's the daily chart for the pound dollar, right? And what happens is, look, the dollar has a tremendous power on the global economy, right? Since the dollar is the world reserve currency, it has a tremendous powers against any other currency. And with the Fed tightening, if other countries do not tighten, right, they don't raise rates, they will lose even more against the dollar. So, and here is the crisis that we have in Japan. Japan is been for 30 years in a recessionary economy. They have decreased for 30 years. They don't have inflation, right? They live very frugally. They don't spend money, and their currency rate is being controlled by the Bank of Japan. So they want to peg the yen against the dollar. Now the dollar, right, has been rising. It's been rising since the Fed decided to tighten, and the yen is losing ground against the dollar, and that is submitting Japan into another crisis, which is a currency crisis. What Japan should do to keep their currency, its currency, stable, they need to raise rates as the Fed, right? I'm not saying the same rhythm, but they need to tie in order to maintain the value against the dollar. But what happens is they have been in a recession for 30 years. They have tried anything to get inflation. They cannot get inflation. If they decide to tighten, it's gonna submit the country in a very, very severe recession. So nobody knows what is going to happen, because it's an experiment that they created. Japan is the most indebted nation in the world. They own like around 200% of their GDP, right? So we'll see what happens there, but it's certainly not gonna be good. Let's see what happens. Japan is the third largest economy in the world, so it's gonna affect every country in this world. So we have here our order. Oh, you guys can see the order. You guys cannot see the order. So here I show the internals for the market. I show how the ADD, is basically the ADQD, which is the advanced decline line for the Nasdaq, and the tick chart, right? The tick chart started to spike up right now a little bit, and also the ADQD, but it's still it's showing like bearish momentum. Like I've said before, I want to see an area, right, where it dropped from, and then the price coming back up with ADD and tick aligned, right? If I estimate that this could keep coming down, then I can find zones like around here or something, right? gonna cancel this order because it's very far, and I'm gonna try to see if I have any other opportunity here. Alright, it's approaching to my demand. It's approaching to my demand. Today's environment is very, very bearish, but I think we could get a tradable reaction off of this zone. So tradable reactions are basically what the name says. Is price is coming regardless of the trend, right? And I estimate that the price is gonna bounce, right? The tradable reaction does not give me the opportunity to follow a trend, meaning I just have to go for whatever I estimate, right? 1 to 1, 2 to 1. I don't like take trades 1 to 1 or less than 2 to 1 because my risk and reward ratio get messed up. So the way I like to trade this is like this, right? So remember, guys, I need to risk $324, right? And I need to have my invalidation point intact. My invalidation point is 13,111.5, right? And I want to be very conservative. I just want to risk 1 to make 2, right?
Franco, they don't see that chart.
I know.
Okay.
I want to risk 1 to make 2, right? So the way it works is like this, around here. So that's my 2 to 1. You see? If I get in at 25, right? 25 3/4. Alright, 25.50.
Order submitted.
It is still beyond my risk parameters, so I need to
order cancel
here and go below a little bit.
Order submitted.
There you go. So the way this works is, alright, I will try to risk my risk. Now the zone is from black line to black line. If I go to micros, I can break this position, and probably with 6-7 micros I can risk the whole area, right? I don't want to do that. I want to trade this one. I don't want to, jump up back and forth from one chart to another. So right now I'm just looking to this long. I trade a reaction there, right? If and here's the important part. And this is because algo trading works in a certain way, right? Some algos just start buying market after a price is met. Let's say price came down here, right? Price came down here, did not fill my order, and did this, right? And the question that I ask you guys, I'm able to retake that trade. Well, I am not. I will not take that trade for the fact that the zone where I was planning to buy, right, worked partially, but it didn't fill my order because I had risk restrictions, right? I had some risk parameter restricting my trade, right? And certain algos, they just buy after the price is, in a range. So let's say one algo trading came back down and they started buying a 135.50 here, right? But it ran out of steam, and when it comes back, if they don't have the strength, which is very hard to estimate because today we're going down, right? So the higher probability is just to trade short as of right now, right? I'm gonna take this long, but I'm gonna take a very quick tradable reaction. I wanna make from here to here, right? Considering that this area of buyers is strong from yesterday, right? Like I said, if I have a reaction on the black line and I'm not in the trade, I won't take this trade. So now we're stuck in this, right? We're stuck in this trade. Like I said, ADQD is against the direction that I'm picking, right? That's fine. But I want to see the tick chart on a extreme. Okay, right now we're in the zone. And it's 3 more minutes for this candle to close, or the 7 minute, right? And we have the 3 minute right there. But right now it's looking good. It's coming to our price, right?
Order filled.
All right, we're in this trade. The tick is at extreme low, right? Let's see how this goes. We will move our stop break even 1-to-1, meaning when we're up, if we're up 15 points, we will move our stop to break even. All right, new 3 minute candle is showing up right now. 1 second, there you go. Showing is showing a lot of weakness. We have no sign of strength yet.
Stop.
All right, we got stopped out of this trade, and we just need to wait for opportunities to go short. That's it. We already met the ATR for the day, right? We already met the ATR for the day, meaning we're beyond the average movement for the day for the last 10 trading days. do have a tradable reaction here. I'm gonna try to take this, right? Use Alright, we're gonna try to take this. Is us surely.
Order submitted.
Alright, I can do 2
Order
contracts
submitted.
here. This zone, it's not the best location, but again, we're gonna go for a. And here's the thing, trend can change, right, from here. Yeah, the tick is not showing tick is not showing any extreme, so I won't be taking this unless it's close to the 0 line. We're selling off, guys. Today, market is selling off. Right, we're back down from where the move started. So that's why the market is so unpredictable. Now, I can go and see what stocks are doing, and I can notice the bloodbath. I see stocks dropping 5%, Nvidia 60%, Airbnb 6%, Spotify 6%, PayPal 6%, ARK 6.5%, Toast 8%, Roblox 10%, Coin 12%, Etsy 16%. They're dropping hard. Now what Apple is doing is minus 2.8%. See how this goes. I do have these three, but oh, there you go. Now I have a spike in the tick. Finally. New 3-minute candle. Looks like it wants to go up. Two more minutes for this 7-minute candle. So I didn't take this one. I thought it was so close to the bottom. I wanted to take the next zone, but it never got there. It was close.
Order
So
canceled.
we canceled these. We have a sell-off type of. We have a liquidation type of drop. Like I can notice the strength of this thing going down. Any comments, George?
No, not currently.
Is there any sort of news that is creating?
No.
No, I can see how stocks are dropping big time. Like we have Wayfair minus 18%, Carvana minus 14%. So again,
Yeah, I think yesterday's rally was just
sell the rally.
a reaction that the Fed did what they were expected to do. That drop was already priced in, so it rallied after the news. But the market internals really haven't changed.
No.
Inflation is still high, gas is up. There's still a war in Ukraine, which is going to cause issues with food supply chain, especially wheat. So there's a lot of factors that go into these markets, not just the Fed. And the sentiment is very obviously negative.
I would take this tradable reaction. The second zone. Let's see how it goes.
Order submitted.
I will take 2 contracts.
Order submitted.
Because I'm allowed to risk up to this area is still working. Now, the more it works, the less I like my trade, because remember guys, like support can turn into resistance, and resistance can turn into support. So this being worked 1, twice, for the 3rd time, I could expect my trade to do this. So I could expect my trade to do this, like this, and then this. So that gives me very little room for my trade to make money, right? So
It's going to be interesting to see what the market does at this level. It's already gone 500 points today, the Nasdaq.
Yeah.
From its highs overnight and from the rally yesterday.
We haven't had a really pullback for me to enter.
No.
And right now, the tick is weird. Like I said.
Yeah, it created a new high.
Yeah, like I said, like
the ADD is at quite the extreme low. Sentiment is certainly
very bearish.
Very bearish on all stocks.
Here's the thing. I'm not gonna take this trade, right? And I want to see something around here, around that red line. Yeah, I do have something here. And this can be a pullback continuation trade. I did have this area, but
such a parabolic move down, you tend to hesitate because the reactions back up on a parabolic move can be.
Yeah, that's the thing. The lower it goes, the lower my probability goes to short. Right? So I cannot pretend that this zone is gonna pay me 10 to 1. Like that's such an unrealistic, way of thinking. Whereas if it comes back here, then I can make 4 or 5 to 1, right? Even if the trend changed, there will be reactions. But here's the thing: we have no bias. Like there are no buyers in this market. Like it's been holding there, probably win counter one buyer, but it's creating a pattern. Let's see what this does. There's another tradable reaction that I have down here. Such a large move. Small caps are dropping big time.
Did get a volume spike at the 10:06 candle on the 2-minute chart. So
Yeah.
that's the general area where this has been holding. Not to say that it can't go much lower, but we did get some buyers that stepped into the market at about 13,100. The general area there. We'll see if they can hold.
If this turns around, I want to be aware of the pattern that it's doing. If it ever wants to go back up, I want to check. I want to be aware of the turning point because I want to trade this long. We're still on a within the yesterday trading range. Remember, yesterday we were minus 1% and ended up plus 3%. Now, sentiment is to the short side. What really made the market go up yesterday was the fact that Jerome Powell was asked about 0.75% rate hike, and here his answer was very bullish. Like he said, the committee is not even considering a 0.75 rate hike. That made the market explode, even though they're gonna raise rates 50 basis points for the next three meetings, right? But that question made the market go up like big time. I was not on my computer. I wasn't trading. I had to, go and do some family things. But I was listening what YouTube was saying, like all of YouTubers and stuff. They were flipping after Powell said no rate hikes of 0.75%. As of yet, we haven't even considered that. Bro, that thing went to the moon because of that. And that was basically the only good news that we had. And we saw Powell kind of dovish yesterday. He was not very bullish. Very hawkish yesterday. I was expecting a more hawkish Powell. For those who don't know, being hawkish means more tightening. Being dovish means more accommodation for the market.
And the market's decided to go lower.
Yeah. This is such a stupid thing, just thinking what was the difference between 0.5 and 0.75. For me it's the same, right? They need to go to a neutral rate. For them, neutral rate, and he says this word, like, it's not a number that we know. He said that. It's a number that we estimate. And the estimation right now is like between 2 and 3%. But that is way lower than inflation. Inflation is like 7.5%. Like I've said, guys, the lower it goes, the less probability for the short. So we want price to come back up so we can trade this thing short. As of right now, we're minus 1R. We lost our first trade. And here's the beauty. We can make all back in just one trade. We just need to be patient for the right setup.
That is the key.
Yeah.
Quality over quantity.
100%. And don't be discouraged because you lost the trade. Like I've said before, like every single trade is just a roll in the dice. Like we have zero certainty per trade. Well, right now the 10-year rate is 3.05. We haven't had this number since November 2018. And if we go to 3.3, which is a really, realistic possibility, we're talking about 11 years. We were there at April 2011, and you figure the level of uncertainty, uncertainty that we had in 2011 after the
Financial crisis?
Yes. These are very uncertain times. And market does not like uncertainty. Like when the market senses that the economy is uncertain, that we have a possibility of a crisis or something, people just tend to sell. Give me cash. Sell everything. I will wait. Right? That's the general attitude towards a crisis. I don't even know what's gonna happen. Nobody knows. As a matter of fact, there's a saying in trading that a monkey can predict microeconomics better than an analyst or an economist. It's so hard to do. It's so hard. What the Federal Reserve tries to do, try to manage the economy, is so hard. It's so unpredictable. That's why I'm a firm believer of let the market figure. Let the market figure and solve the issues itself, right? Like supply chains. Let the market figure and fix it. Now these guys, they're trying to drive the economy. Let's see how it goes. Alright, it's definitely going down. Bro, the pullbacks are so shallow. There's no pullbacks. There's no
We did just 10:30 2 minutes ago, so
yeah, what's the 4 hour doing? I want to see the 4 hour picture. Now I know. Went up to this top.
sell those rallies.
All right, I have a demand there. Like I said, I don't want to, like overcomplicate this. The momentum is so bearish. For me to take this, can you figure this? This is the validation point, right? So if I want to trade this, like below
Order
320, look at that. Even here, it's $400 risk.
Order canceled.
So I don't think it's worth for me to trade this market. Like,
Order submitted.
all right, it's 12,950, right? 12,950. So my 2 to 1, so it's 660. Right? Let's see how this goes. Alright, we had a high volume here on the 1 minute, like a volume spike. 6 more minutes for this 7 minute close, so it's just opening. I don't think it's a chance for me to take this trade. It's just simply such a low risk that I don't have room to play with. I don't think below this point, for it to revert from here is gonna be so hard. So we are at -4% in the Nasdaq. We're starting to see some signs of buyers here.
Order canceled.
What I'm going to do, if it ever comes back, if it comes back down, right, I would like to go inside, like to the extreme. If the tick chart is showing me like an overwhelmingly oversold sentiment, then I will take it long. But it doesn't look good, bro. It looks very, very, very extremely bearish. And pullbacks are so shallow that we can have a really spike of short covering and take prices up 1-2%. Not 1-2% for the day, but 1-2% from where it is right now. That's very realistic. That's easy. I don't want to feel FOMO. I don't want to feel like, oh, it went without me. It went without me, and then I'm feeling like, damn, I need to jump in. That's the worst thing we can do. Is just let it go, wait for your setup to show up, and that's the only way we can make consistent money. Mortgage rate went up 5.25% to 5.25%, the highest number since 2009. Now, there's no way to trade for me. This is on the lower side. It's not giving me extreme, so this has a lot of room to drop. It's not showing oversold sentiment yet. Yeah, tick chart is not an extreme, so I cannot take this trade. Alright, so we have a liquidation type of day. We're 4.5%. Huh?
I think the market is very aware that a recession is coming.
We're having the recession. We already have 1 quarter.
Yeah.
Of negative GDP. Now, crude oil.
And the Fed can't.
The Fed's nothing.
In the last decade, it's dropped interest rates to fight that, but it no longer has that power.
We have no room.
Zero room. Inflation has them handcuffed.
Yep.
Which is not good. My level's around 11.5. It's 30% on the NQ. I'm going to step out for a moment.
Yeah. All right. Let's see how I can find opportunities here. Alright, do you know what I'm talking about? Do you see how these spikes is just to stop out like every short trade? I'm seeing if I can stop this trade. I think it's a real possibility that I can take this short. Now there's a lot of short covering right here. A lot. I would like to see the 7 minute to drop a little bit, and then the next candle fills me in. Spikes are brutal. Spikes are brutal. So 40 seconds for this next minute. I'll see how this goes this next minute. The way I would be trading this, I would wait for this big chart to go to around 300, 200, and within my zone. So there's 1 minute, 5 seconds. There you go. Spike there. Spike up. Spike up. No. Yeah. I don't see how this can reverse from here based on this, right? But it could certainly happen. Amazon is down 7%. It's new fresh lows for Amazon. Netflix is on 192, is down 6%. Nvidia is it doesn't have a new fresh low, but RH is a new fresh low. Tesla is dropping big time, 6% also. Google.
Order submitted. Order canceled.
ARK hasn't made the new lows yet, but it's dropping today almost 8%. This guy simply dropped 70% since its highs. GameStop 117. It's another recent low. Alright, let's see this. Is this a tradable reaction? Yeah. What the internals are saying.
Order submitted. Order canceled.
Alright, we have this little area here. Let's see if we can capitalize there. Real quick 2 to 1. How much is 2 to 1? 2 to 1 here is alright, here. Can do this. Yeah. There you go. Now ADQD is a very bearish. Where I think we're approaching to the zone where the market is very oversold. It's been dropping non-stop for 90 minutes. George, I'm stuck in this thing. I have a tradable reaction. I had this short, like I said, like the more it goes down, the higher I want to pull back. So I need to be better at trading this thing. When it goes down, to be aware of that I can take any, be more flexible with the location when I see the trend.
Your zones do work.
I know. You're watching?
Mm-hmm.
Yeah. Now, ADD shows further weakness. Tick, not so much. I mean, it's being on the negative side. I think those short sellers can get squeezed. Buyers are starting to.
Absolutely.
Huh?
Absolutely. What's the volume looking like in those candles?
I see a double bottom on the 3-minute. See if we can break to the upside. Oh, new 30 minutes. It's a new hour.
It's going to be difficult to sustain that move if you look at the 4-hour candle. It's only an hour.
To sustain
It's
that
only an
move
hour
to the
in.
short side.
Yeah, it's only an hour in, and it's already done its full ATR.
Yeah. So there are two chances. Either we have an overwhelmingly light drop, or we get a reverse from here. See if I can take this. Alright, I have signs of a very, very oversold right now. How much is this?
Order submitted.
300 bucks.
Order canceled.
See how this goes. I'm gonna try to take it. I'm gonna be very, very selective here. I'm only taking this if the tick gives me the opportunity to. How do I do that? And just wait for a new low created in the tick. Like extremely oversold, like self orders been triggered there.
It's getting to you.
Yeah. See how sellers are in control of this market now. We do have some spike in volume in the previous candle a little bit. There's 2 more minutes in this 7 minutes, so we didn't have a 2-to-1 here. I want to see a lower low and a lower low here. Do we have a lower low? Yeah. Oh shit. Look at that.
Oof, another extreme low on the tick.
Yeah. I don't have anything else.
No. It's so that's officially broken through all of the candles from yesterday's news event.
Not really.
Yeah.
Oh yeah.
The low from the news yesterday was
Yeah.
at 12,935.
Yeah.
We're now 30 points below that, so and 20 points from yesterday's low.
Oh yeah.
So we've now moved 650 points south.
I think we're gonna leave it like this.
And still no major buying volume.
No.
That candle just had a volume spike, but that was all selling. No buyers entering that market.
Second?
That there was a volume spike there, but that was all selling. There were 0 buyers in that candle. That volume was to push through that low. We're now getting to yesterday's low.
Yeah.
Yeah, that's yesterday's low right there.
Look, our only viewer commented on the chat. This is a friend of mine, Rach. Yeah.
Ricardo, right?
Yeah.
How's it going, Ricardo? We'll give him a little shout out to our only viewer. Thank you for watching.
For now. Well, look.
We will now return to your regularly scheduled broadcast.
I think I'm gonna leave it like this, right?
Yeah,
I will try to hunt more, but my wife is journeying today, so I have all the family issues. No issues, but compromises.
Happy birthday to your wife.
Thank you.
And we'll be back again tomorrow, I guess.
Yeah.
Thank you, Franco. Yes, sir.
All right. See you guys.
Thank you, Franco.